The Nightly Business Report.
Good evening. Tonight, according to the Sri Lankan Tourism Development Authority, more than 80,000 visitors have arrived in the country during the first 18 days of this month. With oral hearings planned in 9 provinces, the power regulator has launched the public comment process for a proposed change to the tariff for the second half of this year. The ASPI gained 117.46 points, finishing at 16,473.37, while the S&P SL20 also gained, closing at 4,842.51 as the Colombo stock market ended the day on a strong note. And concerns that if the Congress approves President Trump's planned tax cut bill, the government's debt will increase by trillions of dollars, caused by US markets to close precipitously down as Treasury yields rose. Good evening and thank you for joining us. Sri Lanka welcomed 80,421 tourists in the first 18 days of this month, according to the Sri Lankan Tourism Development Authority. Now, this marks a significant increase in tourist arrivals, reflecting the country's growing appeal as a travel destination. Industry experts are optimistic that this upward trend will continue throughout the year. Sri Lanka welcomed a total of 80,421 tourists in the first 18 days of this month, as reported by the Sri Lankan Tourism Development Authority. India accounted for the largest share of visitors with 27,036 tourists, making up 33.6% of the total arrivals. Other key sources of tourists included the United Kingdom with 5,486 visitors, Germany with 5,164, and China with 5,189. Bangladesh has also contributed significantly with 3,863 nationals visiting Sri Lanka this month. As of this month, the total number of tourists arriving in the country has reached 977,305. Among these, 184,095 are from India, followed by 109,675 from Russia and 92,539 from the United Kingdom. The continued growth in tourist arrivals highlights Sri Lanka's increasing popularity as a global travel destination. The government has announced a new national minimum wage, setting the monthly wage at 27,000 rupees and the daily wage at 1,800 rupees. This decision follows an amendment of the Section 3 of the National Minimum Wage of Workers Act No. 3 of 2016. The wage increase took effect from 1st of April this year, with an additional 9,500 rupees added to the monthly wage and 380 rupees to the daily wage. From 1st of January next year, the national minimum monthly wage will rise to 30,000 rupees and the daily wage will increase to 1,200 rupees. And wage adjustments aim to support workers across all industries and services. This step is a part of government's broader efforts to improve workers' financial conditions and economic well-being. The power regulator has begun the public consultation process for a proposed electricity tariff revision for the second half of this year, with oral hearings scheduled across 9 provinces from 23rd May to the 3rd of June.
The Public Utilities Commission of Sri Lanka has announced that written submissions for the proposed electricity tariff revision will be accepted until June 5th. This is in line with the requirements of PUCSL Act No. 35 of 2002 and the Electricity Act No. 20 of 2009. The revision proposed by the state-run Ceylon Electricity Board has already been reviewed by the PUCSL. A consultation document outlining the proposal is available on the PUCSL website for public access. Oral sessions will be held in all 9 provinces as part of the PUCSL's efforts to gather public opinion on the proposed tariff changes. These in-person consultations are a critical part of public input process before any final decisions are made on the new rates. The process aims to ensure transparency and allows stakeholders to voice their concern ahead of the tariff revision.
National consumer prices declined by 0.8% in April this year, through at slower pace than in previous months. The reduction in petrol prices helps alleviate some of the pressure caused by rising food prices. Food prices increased by 2.9% in April compared to a year ago, with significant price hikes in items like vegetables, fish and milk powder. The central bank expects the current period of deflation to end within 1 or 2 months, with prices expected to rise to a target inflation rate of 5% by the end of the year. Electricity prices are set to rise by approximately 19% from June, which could push the overall price index to positive territory. Non-food inflation decreased by 3.7% year-on-year in April, with the monthly impact of petrol prices reductions offsetting price increases in housing, utilities and health. Let's take a short commercial break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo stock market closed with positive gains today as the SPI rose by 117.46 points, reaching 16,473.37, while the S&P SL20 gained 26.15 points, closing at 4,842.51. The market recorded a share volume of approximately 277 million and a turnover of 4.54 billion. For further insights, we now speak with Sanama Saloon from First Capital Holdings.
Continuing the bullish momentum from the previous session, the Colombo Stock Exchange closed in positive territory amidst increased investor participation. The all-share price index surged at the open and maintained steady gains throughout the day, ultimately ending in positive territory at 16,473 with a gain of 117 points. Cargill Ceylon, Melster Corp, John Keel's Holdings, Dialog Axiata and Hemas Holdings emerged as the top positive drivers of the index. Retail and high net worth investors demonstrated active trading following the monetary policy review, which included a cut to the overnight policy rate, redirecting investor attention towards the equity market. In terms of turnover, today's figure saw a notable climb to 4.5 billion rupees from the previous close of 2.4 billion rupees. This is well above the monthly average turnover, which also stands at 2.4 billion rupees. In terms of sector-wise contribution to turnover, the capital goods sector took the lead with a share of 26%, followed by the diversified financial sector and the food, beverage and tobacco sector, which produced a joint contribution of 30%. Thank you.
The Monetary Policy Board of Central Bank of Sri Lanka has cut the overnight policy rate by 25 basis points to 7.75%, further easing monetary policy to support the economic stability amidst subdued inflation and global uncertainties. Now, for further insights on this, we join with Ranjan Ranatunga from First Capital Holdings.
In its May 2025 meeting, the Monetary Policy Board of the Central Bank of Sri Lanka decided to reduce the overnight policy rate by 25 bps to 7.75%. Continuing its monetary easing strategy. This decision aims to support the alignment of inflation with the 5% target amid subdued domestic price pressure and growing global uncertainties. Following early deflationary trends, inflation is now projected to turn positive in the third quarter of 2025, rising gradually in line with expectations. Core inflation is also expected to climb steadily from the current low levels. The central bank notes that the inflation expectations are increasingly aligning with its target, suggesting better anchoring of price stability. Domestically, economic activity shows sustained recovery, while market interest rates remain low and credit to the private sector continues to expand. The credit growth is benefited by key sectors and likely to persist, aided by the recent monetary policy easing. Externally, tourism and remittances have supported the balance of payment precision, despite a widened trade deficit. The central bank purchased forex during this period, and this also helped to build up the reserves. However, Sri Lankan rupee showed a depreciation during the first few months against the US dollar, reversing the trend that we saw with 2 years of appreciation. Looking ahead, the central bank will closely monitor the domestic as well as global developments to ensure that inflation stays on track and the economy moves forward to its full potential. The next monetary policy meeting announcement is scheduled to take place on 23rd July 2025.
Gold prices climbed in Asian trade today, extending recent gains as safe haven demand remains strong amid ongoing concerns over high US debt levels and the passage of a new tax cut bill. Spot gold rose by 0.7% to $3,338.04 per ounce, while June gold futures gained 0.8% to $3,339.20 per ounce. Geopolitical tensions also supported bullion, with reports suggesting Israel is prepared to strike Iran if nuclear talks with the US fail. While news of renewed negotiations between Tehran and Washington helped ease fears of an immediate conflict, investor caution persisted. Gold has held on to most of its gains from earlier in the week, driven by both fiscal uncertainty and rising geopolitical risk. The precious metal continues to be favored by investors seeking a hedge against volatility and global instability. Meanwhile, oil prices continue to decline today amid renewed concerns of oversupply following reports that the OPEC Plus may increase production once again. Brent crude futures fell 1.2% to $64.16 per barrel, while West Texas Intermediate crude dropped 1.2% to $60.86. OPEC Plus is considering a production hike of 411,000 barrels per day in July, though no final decision has been made. The group, comprising the Organization of Petroleum Exporting Countries and its allies, is scheduled to meet on June 1st to discuss output levels. This potential move comes as OPEC Plus continue to gradually reverse its previous output cuts, with supply already increasing in May and June. Market sentiment remains cautious as investors weigh the impact of higher output on global oil balances and pricing. The Sri Lankan rupee appreciated slightly against the US dollar today, with both buying and selling rates easing. It also strengthened against several foreign currencies, including Gulf currencies. It's time to take a closer look at its performance against key global currencies now. Short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Sri Lankan Airlines has launched a major cabin crew recruitment drive to support its growth strategy amid rising passenger demand and expanding markets. Sri Lankan Airlines has launched a major recruitment campaign to expand its cabin crew team in response to rising passenger demand and market growth. The campaign drew nearly 12,000 applicants following a public call for applications, the airline said in a statement. Shortlisted candidates are now being invited to the next stage of the selection process at the Bandaranaike Memorial International Conference Hall in Colombo. The airline emphasized its commitment to a fair and transparent recruitment process aimed at selecting individuals best suited for the role. Susan Jacob, who is the group head of human resources, said that they are seeking individuals who embody the spirit of Sri Lanka and deliver world-class service. The recruitment drive comes as Sri Lankan Airlines prepares for a surge in global travel and rising operational demands. The airline continues to expand its international presence, focusing on improved connectivity and maintaining its award-winning service standards. Access Solar Limited, Sri Lanka's leading photovoltaic solutions provider, proudly celebrates its 25th anniversary this year. Since its founding in 2001, the company has pioneered renewable energy initiatives, including the country's first 1 megawatt standalone DC solar PV system and the first 10 megawatt rooftop solar project. Access Solar has contributed over 100 megawatts of clean energy to the national grid and installed more than 10,000 home solar systems, boosting rural energy access. Its efforts have significantly supported Sri Lanka's goal of achieving 70% renewable energy by the year 2030. Beyond installations, the company has led impactful community projects, including agro-based solar power initiatives and solar-powered digital education programs. Marking a silver jubilee, Access Solar continues to play a vital role in empowering communities and promoting sustainable energy across the nation. Singer Sri Lanka plc is expanding its presence in the light automobile market by introducing a range of diesel three-wheelers from Piaggio, the renowned Italian manufacturer. Singer Sri Lanka plc has partnered with Piaggio to reintroduce a range of diesel three-wheelers to the Sri Lankan market. This marks Piaggio's official return to the country, with its vehicles already widely used with over 1 lakh in operation. The Piaggio Ape, known as Sri Lanka's only heavy-duty three-wheeler, is built to withstand local terrain and commercial demands. Singer's expanded portfolio now includes Piaggio's diesel and electric three-wheelers, complementing their existing range of motorcycles and e-bikes. Singer Group Managing Director Mahesh Vijayawardena expressed excitement about the partnership, noting its potential to offer durable and efficient transportation solutions. Piaggio Vehicles Limited Chairman Diego Graffi emphasized the importance of Sri Lankan market, confident that the partnership will ensure successful relaunch. Piaggio's models, available for pre-order at Singer showrooms, offered versatile solutions for both personal and commercial use, backed by strong after-sales service and financing options. Apparel giant Next has closed its Katunayaka Free Trade Zone factory, leaving over 1,400 workers unemployed. The closure, driven by escalating operational costs, highlights the growing challenges within Sri Lanka's garment industry. Next, a major UK-based retailer, had been a key employee in the region, making the shutdown a significant blow to the local workforce. The Free Trade Zones and General Service Employees Union has expressed support for the affected workers, calling for fair compensation. This closure adds to a worrying trend of factory shutdowns in Sri Lanka's FITs, driven by high operational cost. NDB Bank has signed a memorandum of understanding with SLID Business School, aiming to strengthen ties between academia and industry to develop future business leaders. NDB Bank has signed a memorandum of understanding with SLID Business School to strengthen collaboration between academia and industry. The partnership aims to enhance knowledge sharing, provide industry-relevant training, and give students real-world exposure to thrive in a modern business environment. The MOU was signed by Professor Suren Peters of SLID Business School and Mr. Lasantha Dasanayak of NDB Bank, with key representatives from both institutions present. Students will benefit from internships, training programs, and collaborative research opportunities designed for foster innovation and develop future-ready talent. This initiative aligns with NDB's strategy to partner with leading universities to build capacity and produce highly skilled graduates. The collaboration also reinforces NDB Bank's position as a preferred employer among academic institutions and young professionals. First Capital Treasuries PLC has been upgraded to an A+ rating by Lanka Rating Agency, reflecting its strong credit worthiness. The upgrade highlights the company's solid position in the primary dealer market, sustained profitability, and robust capitalization, with a significant increase in profitability for the financial year 24. And for further insights, we now join with Imran Iqbal, the financial analyst from Lanka Rating Agency.
First Capital PLC has been upgraded to A+ by Lanka Rating Agency, reflecting a strong creditworthiness. As a rating agency, our responsibility is to provide independent opinion on the creditworthiness of entities. It is important to clarify that we do not promote or endorse investment, but instead offer an objective assessment based on our methodology, which consists of both qualitative and quantitative analysis. Creditworthiness in the context of entity or bank reflects the ability to meet financial obligation in a timely manner and sustain confidence among stakeholders. An entity with a strong credit fundamentals is typically regarded as resilient to economic fluctuation and capable of maintaining long-term financial stability while fulfilling commitment to depositors and creditors. The rating reflects First Capital Treasuries PLC's strong position in the primary dealer market. Sustained profitability and robust capitalization, FCT continues to maintain its position as a standalone primary dealer. The company enjoys exceptional year in terms of profitability in FY24. On the back of substantial trading gains on government securities due to sharp decline in interest rates. The company's profit after tax in FY24 stood at 11.1 billion compared to 2.9 billion in FY23. Performance trends to normalize but remains strong, as FCT posted profit after tax 2.5 billion in 9 months FY25. The company remains exposed to highly cyclical nature of primary dealer operations, while profitability is closely linked to interest rates movement and can be volatile. The company's strengthened its capital base, create cushion against potential down cycle, as remains majority of its profits. FCT recorded healthy capital adequacy ratio of 17.95 in 9 months FY25. This is well above statutory requirement of 10%. The credit risk of the company remains minimum, reflecting 98.6% of its asset in the government security. In conclusion, our A+ rating signifies the high credit quality of First Capital Treasuries PLC, and we will continue to monitor closely. Any adverse movement in interest rates leading to sizable loss or equity erosion can impact the rating opinion. Thank you.
Let's go in for a short commercial break. Global business updates coming right after this. Welcome back to the Nightly Business Report. Most Asian stock markets declined today following sharp losses on Wall Street amid rising concerns over the United States economy and government debt. Technology-heavy indexes in Asia were the worst performers, with South Asia's KOSPI falling 1.2% and Hong Kong's Hang Seng Index dropping 0.5%. The losses in tech stocks mirrored declines in US counterparts as higher bond yields and profit-taking weighed on this sector. Japan's Nikkei 225 fell 0.9% and the Topix shed 0.5%, driven by underwhelming flash PMI data for May. Japan's manufacturing PMI contracted for the 11th time straight month, impacted by reduced export orders due to high US tariffs. Singapore's Straits Times Index dropped 0.5% as well, even as the country's GDP growth for the first quarter exceeded initial expectations. US stocks closed sharply lower as Treasury yields spiked on worries that the government debt will swell by trillions of dollars if Congress passed President Donald Trump's proposed tax cut bill.
U.S. stocks closed sharply lower on Wednesday, with the Dow down nearly 2%, the S&P 500 shedding 1.6%, and the Nasdaq losing 1.4%. All three indexes suffered their biggest daily percentage losses in a month. A soft auction of 20-year Treasury bonds pushed longer-dated yields higher, with the 10-year Treasury yield touching its highest level since mid-February. Among individual stock moves, shares of United Health Group dropped nearly 6% after a report in The Guardian said the healthcare conglomerate secretly paid nursing homes thousands of dollars in bonuses to help reduce hospital transfers for ailing residents. HSBC downgraded the stock to reduce from hold. Shares of Target fell more than 5% after the retailer slashed its annual forecast due to a pullback in discretionary spending. And 6 of the Magnificent 7 names finished lower. Alphabet was the lone exception, climbing more than 2.5%. Also on Wednesday, the price of Bitcoin rose to its highest level on record, trading just shy of $110,000.
British sportswear retailer JD Sports posted a 2% fall in the first quarter sales and warned that tariffs under the President Trump could hit customer demand.
JD Sports posted a 2% fall in first quarter sales on Wednesday. The British sportswear retailer also warned high prices in its key US market from President Trump's tariffs could hit customer demand. Investors didn't like what they heard and shares fell 6%. JD warned in April profits would only grow slightly, if at all, this year. That was even before any potential impact from tariffs. It makes almost 40% of its sales in the US. The company also faces headwinds from a competitive and volatile market. And it sees worries over consumer spending and a drop-off in demand for Nike products, which make up for 45% of its sales. The stock has lost 30% over the last 12 months. The group said Wednesday it was further diversifying the range of countries from which it sources goods. Looking ahead, JD didn't give guidance for the current financial year.
And that wraps up today's Nightly Business Report. We value your opinions, so share your thoughts on us and a feedback email through efeedback.ad24english@derana.lk or via WhatsApp at 076 805 7933. We will see you again tomorrow and with the latest updates in the business globe. Until then, I'm Vinod Varnasurya. Thank you for watching. Have a good night.